Hi friends, welcome to Amazon World. In this video, I'll be taking the portion of death of a partner. No worries because I'll be taking the portion of admission come retirement soon after this one. I thought to take this portion because there is only one question to discuss. So this portion will be covered, right? So let's start with death of a partner. If a partner dies, the partnership is usually dissolved. But if the surviving partners desire so, they may purchase a share of the deceased partner and carry on the business. So, I don't think the English is really complicated here. You might be understanding just by reading this. In that case, they have to decide the total amount payable to the legal representative or executor of the deceased partner. The first thing, it is similar to retirement of a partner. But in retirement of a partner, we used to find a amount which the partnership firm has to give the retiring partner. In this case, since that person is going to die, there will be legal representative of this deceased partner. So whatever amount the partnership firm has to give this person will be given to the legal representative as that person has deceased, right? So we have to find the total amount which is payable to that legal representative. So we will be writing the legal representative's name, that is executor we will say, okay, or executor of the deceased partner, and the mode of such payment. Now there are some things you have to include in the amount which the partnership firm has to give the deceased partner's legal representative. They are as follows: the deceased partner's capital and current accounts last balance, fine. His share of undistributed profit or loss, like in retirement, like retirement itself, right? And share of revaluation profit and loss, which we also used to do in retirement. Share of goodwill. This one will be a new concept for us, but in this the question which we have in this study mat, there is no such concept of joint life policy, but I think there is such a concept in our syllabus 2022. No, I have not covered that portion. Okay, let's read further. His share of profit or loss made by the firm between the last year ending and the date of his death. Yeah, this one we used to do in retirement also. That is from the last year ending. In the question, they will give us a balance sheet of a year ending. For example, in the previous question, that is illustration number 19 and 18, they gave us the balance sheet of 31st December 2012, and that person was retiring on 31st March 2030, and we found the profit of these 3 months. Likewise, from the last year ending till the date of his death. So retirement is something which they have already planned, right? But death is not like that. Death can come anytime. So from the last year ending, because last year ending profit might have already shared among themselves from that moment to till the date of his death. So these days, if it can be months, can be days, whatever it is, we have to calculate the profit. So that profit also have to be given to this person. So here also profit and loss suspense account concept is there. Okay, it is similar to retirement only, but the thing is, retirement is something that the partner already pre-planned, but in case of death, it cannot be pre-planned always. Okay, so now let's read further. The accounting procedure involved is similar to that followed in case of retirement of partner. See, that's what I told you. The mode of payment depends on the agreement between the partners. So it will be depends upon the agreement between the partners. So there is two modes. That is, first one is lump sum payment. That is, you're giving the amount which is payable to the deceased partner. It is giving to his legal representative at once. That is lump sum payment. Let's read. If the firm has sufficient funds, the total amount payable on account of the deceased partner is transferred to his representative's account or executor. Such representative's account is debited and bank account is credited on payment of the dues. Now, lump sum payment. Okay, we all know what is lump sum payment now. Next comes what? Installment payment or loan payment. That is, sometimes a partnership firm might not have enough money with them or sufficient fund with them so that they could pay the deceased partner's legal representative at once. So what will they ask? They will tell them that they will pay the amount in installment basis, like loan. Okay, so that is this concept. Let's see. The firm may not have enough funds to make prompt payment. In such case, the total amount payable is transferred to a loan account. Okay, usually when we are not able to pay the amount at once, we will use to transfer that particular amount to loan account. But in I think in illustration 19 or 18, we transfer the amount to the bank account because immediately that amount was settled. So we could just, if the amount is settled, if the question says that the amount is settled, then we can just write bank account. We can credit bank account. But in case if they are going to pay in installment, if the question doesn't specifies anything about the payment of the amount, then we will transfer that particular amount to loan account. Okay, we all know that we have done that in retirement. Same likewise only. Okay, so is transferred to loan account is name of the legal representative or executor. The loan is paid off gradually by installments after considering interest on unpaid balance. Okay, the word loan may or may not be appended with the account, but its gradual payments will definitely resemble the payment of loan. So now let's do illustration number 25. Now let's do illustration number 25. Okay. The following was the balance sheet. ABC, who shared profits in the ratio 1:2:2 as on 31st December 2012. So this is their old profit sharing ratio. ABC are the partners, and this is the balance sheet they have given. So the balance sheet which they have given us is of 31st December 2012. Now let's see. C died on 31st March 2013. So from this day, from till this day, you have to find the profit for these three days. Estimated profit we have to find, and we have to use what account, profit and loss suspense account in this case. Okay, so you have to first find the 3 months profit, because it was on 31st March 2013 the partner C is dying, so he is a deceased partner. His account is to be settled under the following terms. Let's read that. Goodwill is to be calculated at the rate of 2 years purchase on the basis of the average of 5 years profit or loss. So they have already given us the particulars which we can use to calculate goodwill. Fine. Then comes what? Profit for January to March 2013 is to be calculated proportionately on the average profit of 3 years. So here they have given us how to calculate the 3 months profit. I have told you, we have to calculate the 3 months profit, right? From 31st December 2012 till 31st March 2013, we have to calculate the 3 months profit, and then we have to use the profit and loss suspense account. For that, they are telling us how to find the profit for these 3 months. They are giving us the hint. They are telling us to take the average profit of 3 years and calculate proportionately. Fine. Proportionately means we did it in illustration number 18. Okay, likewise. The profits were 2008, 3000, 2009, 7000, 2010, 10,000, 2011, 40,000, 2012, lows. Okay, lows, 12,000. You have to consider lows, but it is negative amount. Okay. Then what else? So things should not be confused, because in goodwill we are taking average of 5 years, and in case of profit we are only asked to take 3 years. Okay, please keep that in your mind. Now during 2012, a mop costing rupees 4,000 was purchased and debited to travelling expenses account, on which depreciation is to be calculated at 25%. So he actually, in the year of 2012, they've told what it is of. In 2012, we have a loss of 12,000, but this 12,000 is not the actual amount. That is why they have given us this information. That is, in 2012, what happened? They bought a mop. That mop was of rupees 4,000. They actually debited it to the travelling expenses account. It should not be debited to travelling expenses account. So first we have to do what? We have to subtract it, and then we have to calculate depreciation 25%. At 25%, you have to calculate depreciation on this, because mop is to be considered just like an asset. Okay, so mop 25%, you have to apply depreciation. So on 2012, this 12,000 should not be taken. There is some adjustment done on this amount. Okay, we'll do that in when we explain solution. Let's read further. Other values agreed on assets are: stock is of rupees 12,000, building is of rupees 35,000. Okay, so here when you look at the balance sheet amounts, stock is of rupees 10,000. It is now revalued at 12,000. That means 2,000 have to be shown in the revaluation account. In case of building, 35,000 is the revalued amount, and 20,000, building is of 30,000. So 30,000 is appreciated to 35,000. That means 5,000 have to be shown in the revaluation account. In case of machinery is of 25,000. 5,000 again appreciated in case of machinery. That also have to be shown in the revaluation account. Investments is of 8,000. So in case of investment, you have something to do, because there is a person called investment fluctuation fund. I have already explained what is the concept of investment fluctuation fund. So I will not going like in a deep way. You have to go and see the video which I have separately made for that purpose. Okay, so we have here investment fluctuation fund, and here investment. So investments cost is of 10,000. We are just assuming, and this will be the market value. We are just assuming investments 8,000 will be the market value. So market value decreased, 8,000 decreased. So losses of what? 10,000 minus 8,000. Losses of rupees 2,000. That 2,000 have to be taken from which one? This one, investment fluctuation fund. So there will be 1,000 remaining. That 1,000 can be either shown in revaluation account, and then from revaluation account we can share it with the partners, or we can just directly share it with the partners. You can do that, or you can, just like I said, you can either directly give that to partners capital account, showing that sharing that remaining 1,000 can be shared among the partners directly, or you can just do use the revaluation account first, and then from revaluation account you can share it with the partners. You have two options to do. Okay, so that is about investment fluctuation fund. And the 2,000 loss have to be shown in the balance sheet, that upcoming or the new balance sheet which we are going to prepare. In that balance sheet we have to write investment fluctuation fund rupees 2,000, because 2,000 was a loss. Okay, we have to write the loss amount on the next balance sheet. Fine. So that is about investments. Then comes debtors are considered good. That means in this question they have given us what? Debtors is of rupees 10,000. Here they have given us bad debts reserve rupees 2,000. It's just like bad debts provision for bad debts only. That is bad debts reserve is for what? What purpose? If there is any bad debts coming, we have to meet that loss. We have to meet that liability. So for that we have created a reserve. That is 2,000. Because of this bad debts reserve, book value is actually 10,000 only. So they are saying that debtors are considered good. That is, all debtors would come and make their prompt payment. There will be no delay. There will be no bad debts. So is there any need of bad debts reserve? No. We have to cancel this. So bad debts reserve is a liability. If you want to cancel a liability, what we have to do? We have to debit that account. Okay, and we can use revaluation account also. Fine. So bad debts reserve is not needed in the new balance sheet. There is no need of writing bad debts reserve because we are going to cancel this. So that's it. Now prepare a new balance sheet of the firm, necessary journal entries and ledger accounts of the partners. So let's do the question. Okay, so first thing we are doing is the adjustment profit of 2012, because there is a case of MOP which they bought in 2012 and they debited it to the traveling expenses, but actually it should not be debited to traveling expenses. So first thing we are going to do is, they have given us what? Losses of rupees 12,000 during the year 2012. They have given us losses of rupees 12,000. They are telling that during 2012 there was a loss of 12,000. They have given us this in the question, the adjustment sign. Okay, so we might have this MOP. There was a MOP which was bought on 2012 for rupees 4,000. We don't know in which date this MOP was bought, and we actually showed this MOP on the debit side of profit and loss account. Debit side of profit and loss account. Just assume this is profit and loss account. So we wrote as traveling expenses 4,000, and we like writing everything else. We add both the sides, and we got debit side as a greater side. And here we got what? Net loss. Net losses of rupees 12,000 is what we got. So actually this, should we actually debit this 4,000 to the traveling expenses? No, that was a wrong calculation, not wrong computation. So what we have to do? This traveling expenses 4,000 was actually debited, right? Now what we have to do? We have to credit, or we have to reverse this entry. So what we are going to do? This 4,000 might have already, only after subtracting this 4,000 we got this net loss as rupees 12,000. What we are going to do? We are going to reverse that. For that, what we are going to do? We are going to add this 4,000 to this 12,000. So before adding this 4,000 to this 12,000, let's do something else. That is, actually now we have to apply 25% depreciation to this 4,000, right? So let's just apply 25%. So there will be no calculation in month or days wise, because in the question they have not specified the perfect date in which this MOP was bought. So what we are going to do? We are going to apply this 4,000. Sorry, we are going to apply this 25% on this 4,000. We get 1,000. Okay, so this 1,000 have to be subtracted from where? From this 4,000, right? So now the MOP is of how much rupees? The book value of MOP is 4,000 minus 1,000. It is actually 3,000. Now these 3,000 have to be, this is a positive 3,000, right? So we have to what? Negative 12,000 plus 3,000. Negative 12,000 plus 3,000 will get you how much? Negative 9,000. We got negative 9,000. Okay, so that is the same thing. So adjusted loss is now 9,000. We have to take 9,000 during the year 2012. We should take how much? 9,000, not 12,000. Now 12,000 should not be taken because we already adjusted it, and now during 2012 the losses of rupees 9,000. It is not 12,000. Hope it is clear. Now when we are taking for calculations and all, we are only owed to take this 9,000. That's it. Okay, so this is the calculation of adjustment profit for 2012. We completed it. Now we are going to valuation of goodwill. So in the question, what have they told us to do? In question, goodwill is to be calculated at the rate of 2 years purchase on the basis of average of 5 years profit or loss. First thing, we have to take the 5 years profit. But in case of 2012, we have to take how much? 9,000 loss, not 12,000. We have already adjusted it. So we have to take 1, 2, 3, 4, 5, right? 3,000 plus 7,000 plus 10,000 plus 14,000 minus 9,000 divided by 5 you do, and you'll get average profit, right? And that average profit have to be multiplied with this 2 years purchase, and we'll get what? Goodwill. Fine. So that is what we are going to do here. We took all the profit of the 5 years, 3,000, 7,000, 10,000, 40,000 minus 9,000 should be taken because we have already adjusted the profit, and we'll get 25,000. Now we have to average it. That is 5 years profit is what we took, or 5 years amount is what we took. So we have to divide it by 5 in order to get the average. So 25,000 divided by 5, you get 5,000 as average profit. Now in order to calculate goodwill, what have they told us? They have given us 2 years purchase. So 5,000 into, and you'll get 5,000 into 2, and you'll get 10,000. So goodwill is of rupees 10,000. But goodwill is appearing at balance sheet at rupees 15,000. Let's see the balance sheet which is given us in the question. In the question there is already a goodwill of rupees 15,000. The goodwill is appearing as 15,000, but the goodwill which we got was how much? Rupees 10,000. So extra amount is shown in this balance sheet, right? Extra 5,000 is shown in this balance sheet. So when we are drawing the new balance sheet, we shouldn't show this extra 5,000. So what we have to do? We have to write off this 5,000. We have to write off this 5,000. Okay, so there is 2 ways you can do that. You can either show it in the revaluation account, or you can also show it in the partner's capital account. So you can opt for any of the options. Okay, so we have to either write off this amount, or you can show that in revaluation account also. So 15,000 is there, 5,000 is overvaluation. We have to write off this 5,000. Okay, among A, B, C in the ratio 1:2:2. Now let's read the balance of goodwill between A and B in the ratio 1:2. Okay, so let's read further. Next, so this is the valuation of goodwill. Now we have to compute the profit for 3 months. We told that it was the question. The balance sheet is given us is of date 31st December 2012, and this person is the C partner is dying on 31st March 2013. So 3 months is there. We have to calculate 3 months profit, estimated profit we have to do, and that profit have to be credited to the deceased partner's executor's account, I guess. Yeah, deceased partner's executors. On the deceased partner's capital account, you have to show that amount to be credited to deceased partner's capital account, or you can also show like sharing that amount, entire profit of that 3 months, entire profit of that firm shared among all 3 partners. You can show it likewise also, I guess. So in this question, we are doing it like illustration number 18. Illustration number 18, we only credited that profit to the retiring partner. So in this case, deceasing partner. Okay. So now let's find the 3 months profit. So for that, you have told us to take 3 years average profit. Average profit of 3 years. We have to calculate proportionately. So let's do that. Like in illustration number 18, we have already done this. So I think this will be easy for you. So share of profit of deceased partner till his date of death is what we are going to calculate. Average profit of last 3 years they have told us to take. So last 3 years means we owed is on 31st March 2013, the C is dying, and last 3 years means what we have to take 2012, 2011, 2010. But in 2012 we are owed to take what? Negative 9,000 or 12,000. So take 3 years average profit 2010, 11 and 12. So that will be 10,000, 14,000 minus 9,000 divided by 3, because we took the values of 3 years. We have to, in order to get the average, we are going to divide it by 3, and you'll get 5,000 as average profit now. Okay, so this profit is to be, this 5,000 is assumed to be the profit of this 3 months. Sorry. So 5,000 is the amount average profit we got. So 5,000 will be for annual. This is annual average. This is annual average profit. 5,000 is annual average profit. We have to get a 3 months only, 3 months portion, because it was only 3 months. Like after the final accounts prepared, after the last year ending, till the death of this partner, there is only 3 months. We only need the profit of 3 months. But this 5,000 is actually average annual profits. So annual means 12 months, but we only need 3 months profits. So what we are going to do? We are going to do the proportionate basis calculation. That is 5,000 is of 12 months. So divide by 12. We need only for 3 months. So into 3. We got what 1,249. We can just round it off to 1,250. Okay, 1,250. So 1,250 is the profit for the profit of the firm for 3 months. Now we have to get the portion of retiring. Sorry, we have to get the portion of deceased partner. So deceased partner, their profit sharing ratio was of 1:2:2. So 2 by 5 is the ratio of the deceasing partner. So 2 by 5. 1,250 into 2 by 5, you'll get 500. You can show it in the profit and loss suspense account. We can either show the likewise, or also you can show this one also you can show. Profit and loss suspense account debit 1,250 into A's account to B's account to C's account on this basis. 1:2:2. You can also show that like we did in illustration number 19. But in this question, we are doing like in illustration number 18. We are only crediting that amount to the deceasing partner. Fine. So these are the calculations or working notes we have to do even before doing the question. So now let's just go directly to the journal entries. This is actually an easy question. Okay, after if you get to know the concept of retirement of partner, you will get to do this question also. Easy question. So now first thing we are doing is passing it. Okay, so now let's start discussing the journal entries. In the first journal entry, I am writing stock, building, machinery. All these 3 assets were appreciated. All these 3 assets value was shown in the old balance sheet which is provided in our question. So we also find the difference amount, and that we are going to write in the revaluation account. So we wrote these 3. Now in case of MOP is actually a unrecorded asset. So when you take the revaluation accounts pro forma, you will get to see this. Wait, see, please only observe the things which I am showing. I will be like, I might have written something else in my notebook. Please don't look at that. Okay, so here see, this is a pro forma of revaluation account. You will see this one, decrease in liabilities, increase in assets, decrease in assets and increase in liabilities we have all considered. Now there is another thing. MOP was an unrecorded asset, right? MOP was an asset, but we didn't record it, so we are now going to record. So once we are going to write the unrecorded assets, we are going to take that entire amount, not the difference amount like we took this one. These 4 things only we are going to take the difference amount, because the balance sheet they have already given us an amount, and the adjustment they have given us another amount. So we took that difference amount and we are writing it in the revaluation account. But in this case of unrecorded assets and unrecorded liabilities, we are going to take the entire amount. We might in this case we are going to write the book value of that asset. That is, we are going to depreciate that. We are going to subtract the depreciation amount from that cost of that asset, and then we'll write the book value in case of unrecorded assets and unrecorded liabilities. In case of unrecorded assets in revaluation account. Okay, so we are also going to consider MOP. That is what I was about to say. So 4,000 minus 4,000 was the cost of the MOP. Now once we subtract depreciation, we'll get 3,000. Okay, then what? Investment fluctuation fund. In our study mat, this differently shown, but that is also correct. Okay, so this one I am showing in the case we have did like this in illustration number 18 or 17. I'm not sure. Okay, in some previous question of retirement of a partner. So I'm doing likewise, so that you guys might not have any confusions. So investment fluctuation fund 1,000. How did I got 1,000? 3,000 was the investment fluctuation fund. From that I subtracted the loss. That is, how did I calculate loss? In a question they have given us that investment, we're considering this as investment cost at 10,000. Okay, so what's happening? So we are showing the investment fluctuation fund 1000 also. That is from in our question, the balance sheet. We are considering this 10,000 as a cost, okay, investment, and adjustment have given us 8,000. That means now the market value of investment is 8,000 and the cost was of 10,000. We have a loss of 2,000. How? 10,000 minus 8,000, 2,000. That 2,000 have to be taken from this investment fluctuation fund. So we are taking 2,000 from this 3,000. So there is remaining 1,000. That 1,000 can be either be shown in the revaluation account and then share it among the partners, or you can also share directly with the partners. So I am showing like I'm first using the revaluation account, and from revaluation account I'm giving that to partners account. That's how I'm going to show. So this is how I did. 3,000 minus 2,000, 1,000, and this all together will be shown in the revaluation account, 6,000. Now what else? In the question they have given us general reserve, bad debts reserve, not be shown in our revaluation account. So what we are going to do? We are going to directly show it in the capital account. Fine. So bad debts general reserve account 5,000, bad debts reserve account 2,000. And we are going to show it in our partners account, all partners account in the ratio 1:2:2. That is their ratio. Okay, so we are going to show that like this. This is the amount which is shown in our balance sheet. And also now they have told us that bad debts reserve, that all debtors are good. That means there is no need of bad debts reserve. So once this is liability. So once we debit a liability, that's going to be that will be not shown in our balance sheet again. Likewise, general reserve also will not be shown in our balance sheet, because we are already sharing it with the partners. That's it. Then now comes what? We are going to calculate the revaluation profit or loss. So once we calculate the revaluation profit, these are the amounts which we are going to show in the revaluation account. So 16,000 is the amount we are getting. So 60,000 will be the profit. There is no amount in our debit side of the revaluation account. So we are just giving that. We are going to share this 16,000 with the partners in 1:2:2. So we'll get the profit as like this. Now the rest of the journal entry I will explain with the help of our study mat. I wrote another journal entry set because there is a chance for you guys to get confused. Okay, so that's why I wrote another set of journal entry. Okay, hope that is going to be clear. So please don't look at these amounts. We have already discussed about the revaluation profit that is being shared with the partners. Now let's what we are going to do. Let's see here in this question. We have already calculated goodwill which is been shown in our balance sheet is of rupees 15,000, and the goodwill which we calculated was of rupees 10,000. So I told you have to write off the extra amount, which is 5,000. So we are writing off that extra amount. A is capital account debit, B is capital account debit to C is capital account debit to goodwill. Goodwill is an asset, so in order to decrease the asset we have to credit the asset. So that's what we have done here. So we write off the goodwill, or you can also show it in the revaluation account also, but since like in this case, in this question we are going to show in partners capital account. So 5,000 is written off. Okay, fine. Then what is profit and loss expense account? We have already calculated what is the profit, right? Profit of only C we have calculated. So C's profit is of rupees 500. We have already calculated here. So profit and loss expense account debit to deceased partners capital account 500. Then what comes in order to see this amount, in order to pass this, we have to first write we have just prepare capital account. Only the balancing figure of that deceased partner will be written here. First write the journal entry of that. We can just write the journal entry. So C is capital account debit to C is executors account. Okay, so that partner that amount have to be transferred to the executors, that is legal representatives account, because C is already died. Okay, so we have to show it like this. So now we have to find what is the amount which the partnership firm have to pay this executor, that is the legal representative of the deceased partner. So that is what we are going to see. So since I have written another set of journal entries, there will be some changes in our capital account also. The amount will be changing. This will how our partners capital account will be. That is, first we are writing the balances which is already given us in the balance sheet, 10,000, 20,000, 20,000. Then we are showing the revaluation profit which we already passed the journal entry, 3,200, 6,400, 6,400. Then sundry reserves. What is sundry reserves? We have passed a journal entry where we say journal reserve and bad debt reserve. So we used to tell when we like we can either show separately also. That is, we can write journal reserve account. We can show that amount being shared among the partners. Bad debts reserve account. We can show it separately, but to make it easier, we are going to show this together. That is 5,000 plus 2,000, 7,000 is going to be shown together. So once we are going to share, like for example, we used to say if there is lots of let's say if there is lots of debtors, if there is numerous debtors, we used to call all the debtors together as sundry debtors, right? All the creditors are together, we call what sundry creditors. Likewise, we are going to call these two reserves together as sundry reserves. So that is what I have written here by sundry reserves, 1400, 2800, 2800, the same amount which I have shown in the journal entry. Then comes our profit and loss expense account, which we have already discussed the journal entry, that is 500 is going to be credited to C, that is a deceased partner, minus capital account. Then comes what we have written of the goodwill, right? So 1000, 2000, 2000. We have already shown the journal entry there. Then what else? There is nothing else to say. So we are going to total both the sides. So we'll get these as the total amounts. Credit side will be the greater side. So we're going to write the same amount on the debit side itself. Okay, please write everything else. We don't copy my capital account into your book. Okay, because I have no time to write everything. That's why. Fine. Please don't copy mine. Fine. Okay, so the same amount have to be written in the debit side. Then what we have to do, the balancing figures, right? The balancing figures of A and B, it will be 30,600, 27,200. Okay, then in case of C, that is the deceased partner, we are going to transfer that amount to that partner's legal representative. So we have to write to C's executor amount. This balance have to be transferred to C's account, C's executor's account. Okay, from C's capital to C's executor's account we are going to share. Okay, so this 27,700 will get us balancing figure. Okay, this is the amount which the partnership firm have to give the legal representative of C. Fine. Then this also have to be shown in the balance sheet, writing how C's executor's account 27,700. Then what else? This amount also have to be shown in the balance sheet in capital account, under capital account. Okay. Now we are going to do balance sheet. We are going to prepare balance sheet. Before that, don't forget to write this 27,700 in that journal entry which we already drawn, right? C's capital account debit to C's executor's account. We have to write this amount corresponding to that entry. Then comes balance sheet. Balance sheet, in this question, when we take our study math, they have actually written of the balance goodwill also. That is, after writing of the 5,000, extra 5,000, they are writing of the 10,000 also between the remaining partners in the ratio of, in their question they have not given us a new ratio. So we are just considering if the deceased partner is going out, 2 is been cancelled. So 1:2 will be the remaining profit and loss sharing ratio. So in this, you will see this. In our study mat, you will see this. The balance of goodwill between A and B in the ratio 1:2. They are writing off the goodwill, balance goodwill also. That is 10,000 also they are going to write off. And they have shown that in capital account also. To goodwill account 3,333 and 6,667 they have shown in the capital account. But they have not shown any journal entries corresponding to that. So I'm not actually writing off the goodwill. That 10,000 I'm not going to write off. I'm not really I don't know why. I don't know whether if it is okay to write off or not to write off. So I'm not writing off the remaining 10,000 amount. Okay, so I have not shown that in our partner's capital account. Okay, so rest of them I have written. Then what I'm going to do, first thing I'm going to show is the goodwill 10,000. In our study mat, you will not see goodwill 10,000 because they are also writing off this 10,000 also between the remaining partners. So goodwill 10,000 I'm showing. Buildings 25,000. More we have to write the book value, that is 4,000 minus 1,000, 3,000. Investment will be written as 10,000 only because this is the cost. I am assuming this as the cost, so 10,000 will be written here. Then stock 12,000. Debtors 10,000, bank 5,000, profit and loss expense account we already written here, 500 have to be shown here also, 500. Then comes what? Capital accounts, 30,600 and 27,200 have to be shown in the balance sheet under capital accounts head. Then what comes? C's executors account 27,700 which we also got as balancing figure, our balancing in our partner's capital account we are writing it here. There is no changes told in case of bank loan or Sunday creditors. So we are going to write it off just like that. 30,000, 10,000 from the old balance sheet. Then comes what? Investment fluctuation fund 2,000. Now study math they have not shown us. They have actually done what? 10,000 minus 2,000. They have written 8,000 here. Okay, but in my case I have just shown the cost here 10,000 because that is how I explained to you. So I don't want you guys to get confused. So I'm just showing the way I have explained. Okay. Okay, now study mat, each question they have given us a different kind of viewpoint. Everything is correct, but so when students are going through that, if they are not getting any coaching, they won't get to understand. Like in one question they did in one way, another question they are doing it in another way. Actually every way is possible, but we'll get confused when we see that. So it's better if we go through one way itself. But in some cases we will be asked to do in a particular way itself. So in that kind of situations we have to follow. So that's why every situation have to be there in our knowledge. Okay, so that is, so 2,000, this 2,000 was the loss. So we have to write the loss amount in the balance sheet. Investment fluctuation fund corresponding to investment fluctuation fund 2,000. So once we do all this together, once we add both the sides, we'll get both sides tallied. 1,30,000 10,500, 1,10,500. Okay, so I guess this is correct. I'm not sure about that goodwill thing. They are writing off their balance 10,000 also. So if any of you knows the correct explanation, you can just comment down. So that's all with death of a partner. Thank you for watching and rock your studies.